Okay, welcome everyone. Today, we're diving deep into something I think you'll find really fascinating. The latest quarterly results from Indian Overseas Bank. We're talking Q1 FY26, the quarter ending June 30th, 2025. Now, bank numbers can seem dry, but trust me, there's a compelling story here. Our mission today is simple. Unpack what's behind these figures, what the key indicators really mean, and, what this tells us about IOB's future, and importantly, what it means for you. We've dug into their press release, the full performance presentation, and the official board outcome notes. So we've got the details.
Absolutely. And what's particularly interesting, I think, is seeing how a public sector bank like IOB is, well, not just surviving, but actually making some pretty significant strategic moves in the current climate. We'll try and connect those dots for you, go beyond just the headlines.
Great. So let's jump right in. The big headline number, net profit. IOB reported a net profit that, well, it soared. It hit a historic high of 1,111 crore rupees. That's 11,111 crore. Just to give you some context, that's a massive 75.57% jump compared to the same quarter last year when it was 633 crore, 75%.
Yeah, staggering growth. And it's not just the bottom line. Their operating profit was also up strongly by over 40%, hitting 2,358 crore.
And net interest income, the NII, that core bank earning that, grew too, right, by about 12.5%.
That's right, 12.50% growth, reaching 2,746 crore. So definitely strong core performance there.
Okay, so strong top line and bottom line growth.
Exactly. But, if we dig a bit deeper into profitability, the net interest margin, or NIM, is always a key one to watch. It stood at 3.04% globally for the quarter.
3.04%. Is that good?
It's solid, definitely solid. But interestingly, the presentation data shows it's actually down just a tiny bit, 2 basis points from 3.06% a year ago.
Huh. Only 2 basis points. So NII dollars or rupees are up, but the actual margin per loan is slightly tighter?
Precisely. It's a small dip, but it does raise that interesting question.
Yeah.
Even with overall profit booming, what slight pressures might be affecting that core margin efficiency? Something to keep an eye on.
Got it. But despite that tiny NM dip, other efficiency metrics look, well, pretty spectacular. The cost-to-income ratio.
Oh, that saw huge improvement.
Yeah, dropped by 754 basis points. It's down to 44.22% from over 51% last year. That feels like a big efficiency gain.
It absolutely is. Lower costs relative to income is exactly what you want to see.
And then return on assets, the ROA, improved quite a bit too, up 44 basis points to 1.14%.
From 0.70%.
And return on equity, ROE, that just surged, up 490 basis points to 19%.
19% ROE. That's really strong for a bank, indicating much better returns for shareholders. So overall, operational efficiency and profitability metrics are looking very positive.
Okay, let's shift gears a bit because for any bank, maybe the most critical thing is the health of its loans, right? Asset quality.
Couldn't agree more. It's the bedrock.
And here, IOB seems to have made some really impressive strides. The gross non-performing assets ratio, the GNPA,
Yeah, it's down significantly.
down to 1.97%. That's below 2%. Dropped 92 basis points from 2.89% last year. The actual bad loan amount fell too, from around 6,600 crore to just under 5,200 crore.
And perhaps even more importantly, the net NPA ratio, that's bad loans after they've set aside provisions, that's down to a very low 0.32%.
0.32%. Wow.
Yeah, down 19 basis points from 0.51%. The net bad loan amount is now only about 816 crore. It's a drastic improvement.
So how did they manage such a cleanup?
Well, a big part of the story is the provision coverage ratio, the PCR. It improved again by 51 basis points to reach 97.47%.
97.5% PCR.
Exactly. It means they have provisions set aside to cover almost all of their existing gross NPAs. It's a massive safety buffer.
Okay, that makes sense. So they're well protected.
Very well protected. And just as important, fewer new loans are going bad. The slippage ratio improved slightly, down 3 basis points to just 0.10%. Very low slippage.
And they're getting better at recoveries, too.
Yes, significantly better. Total recovery from bad loans was up over 46% year on year, reaching 851 crore in the quarter.
And I saw a note about recoveries from accounts they had already written off.
That's right. That figure jumped quite dramatically. They recovered 629 crore from previously written off accounts, up from 364 crore last year. So they're clearly being persistent in chasing down old debts.
It paints a picture of really getting on top of bad loans.
It does. And if you look segment-wise, the improvement is broad-based. Retail NPAs down to 1.16%, agri at 2.09%, MSME at 2.62%. Even corporate NPA is very low at 0.43%.
So it's not just one area driving the improvement.
No, it suggests a fundamental improvement in underwriting and monitoring across the board. And that kind of widespread improvement is absolutely key for sustainable, healthy growth going forward.
Okay, so foundation strengthened, books cleaned up. Let's talk growth then. How is IOB actually growing its business now?
Well, the overall numbers show solid expansion.
Total business deposits plus loans grew by over 12%, right? Reaching almost 6 lakh crore rupees. 5,093,213 crore to be exact.
That's it. And total deposits were up over 10%, hitting 3,030,792 crore.
And the quality of those deposits, I saw something about CASA.
Yes, that's crucial. CASA deposits, the low-cost current and savings accounts, they grew by a strong 15%. That pushed the CASA ratio up by 161 basis points to 43.78%.
So nearly 44% of their deposits are low-cost CASA. That helps margins, presumably.
Absolutely. A higher CASA ratio generally supports better profitability. On the other side, gross advances or loans increased by just over 14% to 2,062,421 crore.
Giving them a credit-to-deposit ratio of around 79%.
79.33%, yes. Pretty balanced.
Now, within those advances, you mentioned a strategic shift earlier.
Yes, this is really interesting when you break down the domestic loan book. While total loans are up, the composition is changing quite deliberately, it seems.
How so?
Look at the growth rates. Retail loans, up a huge 38.75% year-on-year. Agri loans, up almost 26%. MSME loans, up a respectable 6%.
Okay, strong growth in those areas.
And this is the key point, corporate and other advances actually declined. They fell by 11.3%.
Declined. So they're shrinking their corporate book.
It certainly looks like a strategic de-emphasis.
Yeah.
They seem to be focusing heavily on the RAM segments, retail, agriculture, and MSME.
Why RAM?
Generally, for public sector banks especially, these segments can offer better diversification, potentially better asset quality if managed well, and often more stable yields compared to large, lumpy corporate loans. It's a common de-risking strategy.
And within retail, you flagged something specific.
Yeah, the other retail loans category saw absolutely explosive growth, 123.76%. It's not specified exactly what's in there, but that kind of growth definitely catches the eye. Something to perhaps watch in future results.
Interesting. Okay, so alongside the numbers, there's a big push on digital and customer experience, isn't there?
Oh, absolutely. It feels like a core part of this transformation.
They launched quite a few things recently, like a QR code feedback system, re-KYC through their business correspondent.
Making things easier for customers, definitely. WhatsApp banking, too.
And some unique initiatives, an organic farming card, and this IOB Akshara AI pin generator using the Tamil script. That sounds quite innovative.
It really does. Using AI and local script for PIN generation, linking it to cybersecurity awareness, that's quite a creative approach. It shows they're thinking locally and digitally.
And they got recognition for it too, right? Ranked first among PSBs for customer service in June via the CP DREAM portal, and got a mention in the EASE 7.0 Banking Reforms Initiative.
Yes, external validation seems to be coming through. And the user numbers back up the digital push. Mobile banking users over 10.5 million, internet banking nearly 3.6 million, UPI users hitting almost 13 million.
And they're still expanding physically too. 95 new branches.
Yep, bringing the total domestic branches to 3,345. And they've significantly increased their business correspondent network to almost 11,000.
And a lot of those branches are rural or semi-urban.
Over half, 58%. So it's a mix of digital reach and maintaining that physical presence, especially outside the major cities.
So why this big digital push for a bank like IOB? Is it just keeping up?
I think it's more than that. Yes, it enhances customer satisfaction, makes things more convenient, but it's also fundamentally about improving operational efficiency, cutting costs, and ultimately driving business growth by reaching more people more effectively. That Akshara PN idea, for example, it's not just tech. It's about engagement, localization, and even education on cybersecurity. It's quite strategic.
Right. So looking longer term now, what about their overall financial strength and their broader strategy? Capital adequacy looks good.
Very good. The Basel III Capital Adequacy Ratio, CRAR, improved again up 46 basis points to 18.28%. That's well above regulatory requirements, showing a strong capital buffer.
And they seem to be making ESG, environmental, social governance, a bigger focus. They've even got a mascot.
Yes, Mr. Harrod, for environmental awareness. But more substantively, they're an early adopter of PCF in India. That's the Partnership for Carbon Accounting Financials.
What does that mean, practically?
It means they're committing to measure and disclose the greenhouse gas emissions associated with their lending and investment activities. That's a significant step for a bank.
And they have specific green finance products, too.
Yes. Loans for electric vehicles, solar energy, green deposits. They list quite a few. Plus, ongoing social initiatives like financial literacy centers, especially for women.
Okay, so a clear ESG push. What about other strategic things like investments or joint ventures? I saw mentions of an insurance company and something in Malaysia.
Right. They hold an 18% stake in Universal Sompo General Insurance, which seems stable. The more complex situation is the joint venture bank in Malaysia, India International Bank Berhad. IOB held 35%.
What's happening there?
Well, the Malaysian Central Bank approved its voluntary winding up earlier this year, back in February 2024. The process is underway. Its loan and deposit books were actually wound down to zero by the end of 2024.
So it's closing down.
Effectively, yes. The final financial impact on IOB's investment will be determined once the winding up is complete.
And there was another change involving a regional rural bank.
Yes, an amalgamation. Utkal Grameen Bank, where IOB had a stake, merged with Odisha Grameen Bank to form the new Odisha Grameen Bank, effective May 1st, 2025. IOB now holds 35% in this new, larger entity.
And that affected their books.
They had to make an accounting adjustment because the assessed value of their investment declined post-merger. It's reflected as a reduction in their reserves and surplus.
Okay, so it shows that even while profits are high, they're actively managing these, let's say, more complex legacy or strategic holdings.
Exactly. It's not all straightforward growth. There's portfolio management happening too.
Right. Now, we should probably touch on some of the finer points from the disclosures and what the auditors noted. Anything major stand out?
Well, they continue to hold significant provisions for loan losses, including specific ones related to COVID-19 risks, which is prudent.
And there was a large number related to deferred tax assets.
Yes, a net deferred tax asset balance of around 3,430 crore rupees. They reversed about 400 crore of this in the quarter based on estimates of future profitability. DTA basically represents potential future tax benefits.
Okay. And contingent liabilities, those potential future obligations.
We have quite significant contingent liabilities listed, mostly related to disputed taxes, income tax, service tax, GST totaling over 5,790 crore rupees.
Wow, that's a big number. Have they made provisions for that?
No, they haven't. The notes state that management, based on legal advice, believes they have a fair chance of winning these cases on appeal, so no provision is deemed necessary at this point.
But the auditors mentioned this.
Yes. This is one of the 2 points highlighted in the auditor's emphasis of matter paragraph. They draw attention to both the realizability of that large deferred tax asset and the non-provisioning for these significant disputed tax liabilities.
So the auditors aren't disagreeing with the accounts, but they want users to specifically be aware of these 2 items.
Precisely. It doesn't modify their audit opinion, but it flags them as areas requiring judgment and carrying some inherent uncertainty. It's important context for anyone analyzing the financials deeply.
Got it. And just a couple of other minor points. They paid a small RBI penalty.
Yes, about 64 lakh rupees during the quarter. Relatively minor in the grand scheme.
And no issues reported with how they used funds raised from bonds.
Correct. The audit reports confirm no deviation in the use of funds raised via listed debt securities. So good governance on that front.
Okay, so pulling it all together then, it really feels like a story of significant turnaround and strategic repositioning for IOB.
I think that's fair. Historic high profits, a dramatic cleanup in asset quality, a very visible push into digital and customer focus.
And a clear shift in lending towards retail, agri, and MSME, alongside managing some older, complex investments and stepping up on ESG.
It's quite a comprehensive picture of change.
So what's the final thought for our listeners to chew on?
Well, I think this detailed picture raises a really interesting question for you to consider. We're seeing a public sector bank making significant strides in efficiency, asset quality, and digital transformation, while also focusing on segments like RAM and green finance. So the question is, how might this continued evolution at IOB and potentially other similar banks reshape the competitive landscape in Indian banking? And what could it mean for financial inclusion, regional development, and the push towards a greener economy? It's something to think about.
A great question to ponder. That wraps up our deep dive into IOB's Q1 FY26 results. We hope you found this insightful, maybe even a bit surprising. Thanks for joining us, and we'll catch you next time.